Welcome to the Modern CPA Success Show, where we're 100% focused on helping accounting firms achieve success. If you're an accounting firm owner who wants to learn how to grow your firm by providing virtual CFO services, then this podcast is for you.
All right, welcome to today's episode of the Modern CPA Success Show. I'm Tom Wadelton. I work for Summit CPA Group. We're a division of Anders CPAs Advisors. I'm one of our full-time virtual CFOs. As usual, I'm joined by Adam Hale. Adam is our Chief Operating Officer, also a partner at Anders CPAs Advisors. And our guest today is Aaron Rubin. Aaron is a partner with Werba, Rubin, Papier. Aaron is also an accountant and lawyer, so lots of letters with CPA, CFA, JD, all behind his name. I'm jealous, Aaron, as we talk about that. Started his career at Deloitte, so had some kind of big accounting experience working in tax, and then now works with a significant number of young tech clients in the San Francisco area. So Aaron, I'm curious, I know what you had told us a little bit about is you do a lot of work with pre-IPO stock options. Maybe starting with just kind of how you got into doing that and that expertise?
Yeah, well, and thanks for having me today. We look forward to the conversation. But we, I think several years ago, we were sort of that standard wealth management tax firm. And we were, it's sort of looking for anyone who has assets, so retirees, widows, orphans, that sort of thing. And then all of a sudden, I think it was probably 3-4 years ago that we got a couple Zoom clients, and before they went public, and we're helping them out, doing think through some of the tax issues, the divestment problems they were going to have, qualified small business stock, all the things that people at pre-IPO companies, struggle with. And sure enough, obviously they went public, and we started helping them through, okay, this is some of the strategies that you should, employ, for 10b5-1 plans or things like that. And so we had that experience, and I walked into, our managing partner's office one day, and I said, we do this really well. We should do this, and he's like, absolutely, totally agree. And, we said, let's make that our focus. And so we've never looked back. And it's been great. I'll say no shortage of leads. A lot of them want the tax help mainly, but, for us, our main model for revenue comes on the wealth management side of things. And it's been fantastic.
Yeah. Yeah, I wanted to joke that working with young tech startups, it's really hard to find those if you're living in the San Francisco area, isn't it? It's just really hard to, why'd we pick that niche that was in there?
Right.
Now, maybe I'll make myself, this may be a stupid question. You said you got a bunch of Zoom clients. Is that people interacting with you on Zoom, or is that just a term for?
No. The people who worked at Zoom.
Oh, literally the Zoom company. Okay, got it.
Yeah. So Zoom at our office, which we just moved out of not that long ago, was literally across the street from Zoom headquarters.
Nice.
And so we actually got referrals from an attorney who worked with a lot of clients at Zoom, and so the stars just sort of aligned in that way.
And when was that you were doing that? This was pre-pandemic, probably.
It was definitely pre-pandemic, because
Okay.
I think Zoom went public in either late 2018 or maybe it was mid 2019.
Okay,
I'd have to go back and.
Okay, one of the early companies I thought of that just exploded when the pandemic hit.
So you helped Zoom out then as well?
Yeah.
Like you helped Zoom themselves out?
No, mainly working with the individuals who work at Zoom.
Got it.
Okay.
So we don't really do a lot of corporate work. Obviously, if someone wants us to come in and present to clients, Freudian slip, to present to prospects, or I should say employees of theirs, then we'll obviously do that. But a lot of our referrals come from people who come to our website looking for information and need help.
So is it the corporation though that comes to you and says, "Hey, I've got a bunch of people on my team. We're about ready to do this thing. Maybe they could use a little bit of help," and then you end up working with multiple people in that same, putting together kind of a master plan for a lot of the, upper management for a pre-IPO company.
I wish. Would love to find the key to unlock that one. Haven't found it so far. A lot of it, is word of mouth. We play in a really small sandbox, and people that find us, are oftentimes going through other vendors who are also known in the space. So no, we don't get those invites. I think we should. A lot of the time it's who you know, and
Sure.
We have not been invited yet.
Okay.
Okay. But the individuals will eventually come to you, or some of them will come off, one off here or there, and then refer a friend or somebody else on the management team or something of that nature. I think a lot of times that companies probably just don't realize a resource like, you know what I mean? They're too busy kind of thinking about like what's the next step for the company, and they're focused more on the enterprise level. Not to say that a lot of tech startups aren't very conscious of their leadership team and things like that, but they're just kind of assuming that that can all be taken care of at an individual level, and probably just don't realize that a resource like you would be available to like kind of be a nice 1-2 combination, almost an employee benefit, if you will, of having you come in and just educate the upper management team on what their options are and how they could do some advanced tax planning. Because I'm sure understanding there's probably some stuff on the back end that you see at the corporate level too, that if the corporation would have maybe done things a little bit different or changed some stuff up, it really changes the what my options would be as an employee. It's like, oh, well, if your company would have done it this way, you could have actually done this, but since your company did it this way, you have to do it that way. Is that true?
Yeah, Adam, that's a fantastic point. I say that all the time. It's like, gosh, how many clients or people that come in that, I say, well, can you early exercise your stock options? And it's a lot of it's no. I mean, some people say, oh, it's a cost thing. I'm thinking, how could it possibly be a cost thing? Just because, your early exercise stock options, it shouldn't increase, right, the cost all that much, because all you're really doing is you're prepaying for the stock. That's all you're really doing. And as it vests, it just goes in, instead of going to your vested, account, it goes to your stock that you already own account. So I talk to people a lot about that. So that's a fantastic point. And I think another part of it is there are companies out there like Carta who are really trying to be the one-stop shop for everything. Because Carta isn't of itself, right, a company that's trying to go public at some point, and so they also they have their tax. I want to say offering. It's not really an offering.
Sure.
They have their tax advice page, right? And so the CFOs or the CEOs or the HR groups are like, okay, well, gosh, we'll just add this onto our Carta subscription, and our people will be, they'll have the access they need. And I've seen some of the modules, and I haven't been terribly impressed. It's not advice, it's information, and there's a difference.
Do you want to teach us a little bit about, so you talk about pre-IPO and stock options. You want to tell us a little bit about that, and then maybe what are some of the main things that you're dealing with when a client comes and has those to help them kind of understand it?
Yeah. And a lot of times it's the AMT issue that people that are biting people. So incentive stock options, and I know this is a show that a lot of CPAs listen to, so I don't want to get too much, too basic, but it's a AMT preference item. That bargain element strike between the strike price and the fair market value, which is the 409A, which is usually it's an annual thing or whenever there's a fundraise, and so because it's a preference item, it shows up on the AMT, and all of a sudden it costs you $10,000 to buy the shares, but the tax cost might be in the millions. Based upon what that 409 is and what your strike price is, and so a lot of people come to us because they have a problem, and they want to figure out, hey, how much is this going to cost me? What do I do about it? Do I get it back? And obviously, as a CPA, right, we all know that the AMT, the ISO bargain element preference item is a deferral item. So eventually, it comes up as a credit, hopefully. And so, we talk a lot of people through that. But I mean, they also have issues with non-qualified stock options. If there's a bargain element there, right, that shows up on their W-2. And if you're a pre-IPO individual, right, that means you have to come up with the cash because you can't sell the stock usually. I mean, there's exceptions. And so thinking through some of those issues, and what do people do when they have that, right? When they'll owe millions of dollars, but can potentially save millions of dollars if they, if things time out right. And there's vendors all over the place that are willing to loan money. So whether it's a loan or whether it's prepaid variable forward contracts, which we get a lot of questions about, or maybe just straight up forward contracts. We look at all of those things and say, okay, this is what happens if you do this. How much is this money going to cost you? Okay, well, think about it. And so, again, it's in taking the position on the returns. That if it's, let's say it's a prepaid variable forward contract, it's an open contract because the price isn't known, the quantity of shares isn't quite known yet. So, and so eventually, when you go to report it, it's going to be reported. When you transfer those shares over, and then you have, are you gonna usually you can substitute cash or higher basis stock for whatever you owe on the variable forward contract. So it can get messy a little bit.
I'll bet you find yourself just teaching a lot of people about what a stock option is and how they work. Am I wrong?
Yeah,
I would guess you got a lot of non-financial people, I assume, coming to you, and they've been given something with a whole bunch of pages and a bunch of legal language and probably don't really understand what they're holding. Maybe I'm wrong.
Right. And yeah, well, and also tax preparers as well.
Sure.
If you're not versed in it, I've seen people get bad advice from tax people. Now, usually they're not CPAs. But again, even CPAs, right, make mistakes sometimes, or they're not as deep in the knowledge as they need to be, and they create this huge AMT bill for their clients, and they don't necessarily realize it. Or I've seen it where they take that AMT difference and they don't put it as a deferral item; they put it as a permanent item, and now you've sort of done away with the credit, which is a major part of of the ISO transaction is using the credit in later years. So you have to know that stuff.
Yeah. So what you're saying, though, is it's not too late whenever a client. So for all the tax professionals and everybody, getting ready to do all this stuff here in a couple months, whenever their client comes in with with all this paperwork that says, hey, congratulations, you've received these options or whatever that looks like, it's not too late is what you're saying. Or maybe they should be having these active conversations with clients that are in the tech space and telling them, hey, if these kind of things come up, you need to get a hold of me right away. Or how does that work? I mean, once they get the documents, is it done deal? Or
yeah, I mean, there's lots of different ways. And every plan is different. That's what makes it super difficult. As I said, some plans do allow for early exercise. So then you have to talk to your client. I mean, if you have clients who are going into a some sort of high-tech role, right? You want open lines of communication, right? Because you're going to have to do quarterly planning, most likely. You're going to have to do year-end planning for AMT purposes, at least. And certainly, someone comes to you and says, "Yeah, I just started this job." Okay, well, let's see what you got. Can you early exercise? Make sure you get the 83B election on time, right? Because you only got 30 days, and that's. It's not usually. It's not too late, right? Hopefully, it's not too late when they come to you. As long as they haven't done the exercise and then waited to tell you they did the early exercise and missed the 30-day window for the 83B election, not too late.
Yeah. So either way, it sounds like you still need to have a pretty proactive conversation with them, regarding all that kind of stuff. And you're right. I mean, a lot of accounting firms just don't do this very often. I mean, I've probably only had to deal with a handful of them in my life. And every time I do, it just felt like I had to totally re-educate myself again and go, are you sure this is the way we're supposed to handle this one? Because they're all a little bit different, like you mentioned. And it's just kind of like, it can be frustrating, especially for clients, realizing they just got smacked with AMT for something that they don't really necessarily have the cash for. And frankly, I didn't realize something that you just kind of glossed over there, but I didn't realize that there were loans available to those people either. I've heard of situations where employers have kind of made some extended some lines of credit to people and do those kind of things, but I didn't realize there was actually a service out there for these people. Can you talk a little bit about that then?
Yeah. There's a few major players in the space for getting loans, and usually they're either structured as a loan or a prepaid variable forward contract. So just name a few. Quid is a big one. Liquid Stock, SecFi. They're all sort of the bigger players in the space. I know I'm missing one. I'm blanking on it. And there's a guy I know out of San Francisco his whole business model is helping people negotiate those packages. So he'll go around and he'll say, hey, he'll go to the secondary market and he'll say, okay, what's our best offer right now in the secondary market? Okay, yeah, okay, now SecFi, what's the best you can do? Okay, quit. What's the best you can? And he goes around and says, okay, presents it to the client, be like, hey, this is the one I would do, and by the way, let's negotiate this. Because I mean, you can imagine how expensive it is to get that loan, right? Because you're talking about not non-liquid stock, which may end up being worth zero someday, as likely as it is, to go, be the next Facebook. So, it's not cheap money. And oftentimes there's an interest rate. It could, it used to be like 6%. I think it's closer to 10% now.
Okay.
And on top of that, they have like a loan origination of, 4%. Oh, and by the way, we're going to take, depending on how long the loan goes, we're going to take somewhere between 10 and 15% of the shares as compensation as well. So you end up having, so it costs a lot of money to do these things. But if you're up against the gun, and let's say you just left your company, so I mean, and so if I'm a CPA out there right now, and someone says, I just left my pre-IPO role, you need to start asking questions. Like, are they ISOs? That means you got 90 days to figure out what to do with them, or maybe they're going to convert to non-qualified options. Well, there's a risk there, right? Because if it's non-qualified, now all of a sudden it's all W-2 wages when you eventually decide to exercise, and so there are choices to make. So again, if you have a client that's going through a transition, you got to ask questions for sure. But the loans are available, and so if there is a cash need, there is a lender somewhere willing to make that loan. It's just a matter of how much do you want to pay for it.
Sure. Yeah. Just like you said, though, the collateral is a little sketchy there. I didn't really realize that was kind of available, but the secondary market is also kind of an interesting option as well, like being able to take it there and shop it. Yeah. So,
are you interested in offering virtual CFO services at your firm or scaling your existing service offerings? The Virtual CFO Playbook, How to Land $60,000 a Year Clients and Provide a Killer Client Experience, is an online series of modules that will equip you with essential tools for creating and delivering scalable VCFO services. These approaches have helped Summit CPA grow from $500,000 to upwards of $5 million in revenue over the past decade. If you're ready to grow your firm, visit summitcpa.net/VCFO Playbook to enroll now.
Aaron, to Adam's point about feeling like you'd have to re-educate yourself, and I certainly would. If a tax professional or CPA is listening now and saying, I have a client like this, right? All sorts of things, but options is one part of it. Are you a resource they can turn to for advice in this particular area as an expert? And I'll be honest, as a tax professional, not going to risk losing that client that you then end up saying, okay, let me take the whole client. Do you work with people who come and say, can you help me with this part?
Yeah, our business model for our firm, most of our revenue, almost nearly, actually all of my revenue, and just in terms of the firm, nearly all of it comes from the wealth side of things. For us, the tax side is a lead gen. It also makes the clients stickier. So it's, if getting a tax only client is not really exciting for me.
Sure.
For my firm. So, we have had situations where client says, hey, I like my CPA a lot, but they just don't know this. And usually it's, and like on that prepaid variable forward contract, right? It's an open transaction. Now, maybe it closes 2 years or 3 years after it's opened, and now you have to report all the different occurrences that happened in the transaction in the current tax year. CPAs, who don't work with that often aren't comfortable, and so we'll consult, as necessary.
Okay. Will you prepare the forms and do those kind of things and the calculations and everything for them?
No one's asked us to do that yet. I think once we explain everything and kind of what goes into the transaction, I think it's all Schedule D type stuff. You just have to do the basis calculations correctly. But I mean, yes, we would. I mean, obviously, we charge $350 an hour, so whatever anyone would need, we could do.
Sure.
Oh, okay. So you would be able to help them out and then walk the client also through, any kind of elections that they need to make and things they need to consider. Put together the plan for them. Do you do that as well?
Yeah, we do limited engagements. For sure. Easier to do them, between the months of April and August and then, November through December.
Sure.
But during the year, we do have some capacity, with our people that we can do a couple of limited engagements during busy season. But I try not to do that to our people too much. They'll hate me.
Yeah, no, that makes sense. And then, but what about some tips for people listening that have what should they be listening for? When should they get an expert involved? That kind of thing.
Yeah.
Yeah. To me, it's transition out of a business. So leaving your role at a pre-IPO company is a big one. Also, when an IPO that happens, the actual IPO can be a little tricky, and especially if they have some of the more complex kinds of contracts that are out there, you're going to want to get some help on it. Those are probably the two big ones. Or if someone's looking to buy their shares and you want to make sure that you're going to be planning right, that could be a thing.
Well, that's why I was wondering, just from a financial planning standpoint, it would seem to me that if you were even just in that position, and that might be an opportunity, that there's a planning opportunity there from a wealth management side to kind of incorporate that kind of stuff. And that's where, people listening that are doing the tax preparation, they might not have wealth management built into their practice, but is that something that they could, partner up with you and help build out like a financial plan for them that incorporates some of these conversations about what to do with their stock options and those kind of things?
Yeah, so we're not an hourly group, so we don't really do plans just as a one-off. It's part of the overall wealth management package. So again, you'd probably want to engage a CFP out there, who does the hourly work for that.
Okay. Does that mean the best partnership then is, but I'll continue to retain someone as a tax client, but I don't offer the wealth management services, and your firm might offer the wealth management piece to that client?
Yeah. And again, that's great for us to not have to do the tax work. I mean, I have clients like that, where they had their liquidity event. That was referred by a CPA, and the client was like, hey, well, should I move my stuff to you? Which I get what she's asked. And usually my response is, look, you've gotten really good service from this other CPA. If I were you, I'd stick with them. To me, it's, having a tax preparer that you like and trust. It's sort of like having a dentist that you like and trust, right? I like my dentist that I go to, he's very expensive, and and insurance doesn't even really touch it. But you know what? I will pay that premium. I will gladly pay that premium for a service that I put a lot of value on. So I think having a tax preparer similarly. Yeah. I tell people, it's possible we would be cheaper because for our and full disclosure, for our clients that have over a certain amount, we'll include the cost of their of tax prep and projections into one fee. But as I said, if you we have a couple of clients that we don't do their taxes or accounting for, and that's perfectly fine. I don't like to get in the way of a good relationship there.
Yeah. Is there a tax director sitting in the office next to you who's freaking out because you're I don't want the taxes, and he's like, what are you doing trying to turn away? I'm doing this.
No, it's we within our organization, we try to align everyone. So when our tax people give us referrals on the wealth side, they get compensated pretty well for that sort of thing. So they're definitely incentivized to get wealth clients.
If we broaden things, I know wealth management is your big area that you look at. If we broaden beyond just the IPO, as people come into you, right, they've probably gotten all sorts of advice. Any sort of top couple tips where you're here are the biggest sort of mistakes that I see as people walk in, things that they're believing or strategies they've done, which is a fairly common thing that you're saying, hey, we really wish people knew. Something else? Yeah,
I think a lot of people, they look at their wealth, and either they're if they have those pre-IPO stock options, right, they're either bullish or they're not. And the people that get bullish, it's hard to pull them from their bullish position. And to say, hey, by the way, I know you have XYZ stock, but you're also, employed there, and, and you may want to diversify, not just your current income, but your current assets as well. And so a lot of people sort of fall in love with their company stock. Mm-hmm. I don't think it's as big as it was probably like before, like Enron, right? Because Enron sort of dispelled everyone's, vision of, oh yeah, this is going to go great. But I think that, I think that's the one thing. People fall in love with their stock and they say, oh, my CEO said that this thing's going to 200 a share. It might, but hey, what if it doesn't? Because for every story that I have, which I call the Apple story, right? Because I've been telling people to sell their Apple stock since 2007, and thankfully a lot of them didn't listen to me. But for every one of those, there's way more people that lost way more money holding on to their shares than those that made by holding on to their shares. So to me, it's all about having a plan to start to divest from that concentrated position.
So do you have any particular rules of thumb? And I'll just say a quick story. I had worked for a large public company. And at one time, was having a conversation with someone who reported the CFO. So pretty big job. And he was bragging, he was a finance guy, bragging that 98% of his wealth was in the company stock. And I just remember at the time thinking, he was the one who would give comment or talks about diversification. I thought, what are you thinking? And then, as you can imagine, 5 years later, the company's on hard times. I'm like, man, that just seems crazy. But I'm curious, if you had someone who, you work for the company and you've got all these options or maybe actually shares, do you have certain rules or things that you would say, hey, here's what we think is a smart practice?
Yeah, and I think this sort of goes back to something that Adam was talking about with the financial planning piece of it. And it's looking at the financial plan saying, hey, by the way, if you sold 25 or 50% of whatever this position is, you could solidify your retirement at this point. And you could, if you view your life in, several different sort of buckets, like the, bare minimum bucket or the retirement bucket, then the aspirational bucket, then the, whatever beyond aspirational bucket
stupid money bucket,
hey,
something like that, right?
Stupid, right?
Yeah.
And you say, hey, if we get rid of this 25% of your holdings, we could fill up that first bucket, and and even if things went to hell in a handbasket, you got your bucket filled, like no worries.
Yeah.
And so it's using financial planning as a way to communicate what needs to be done. Now the mechanics behind it, in terms of, because people hate paying taxes. I don't know if you know that, but people hate paying taxes. And if you could say, hey, by the way, we're going to try to construct something that gets you the most tax efficiency that we can. Maybe we can fill up that bucket a little more quickly, and then maybe move on to some of the other buckets at the same time. So again, I don't think there is a rule of thumb. Oh, it should be 25%, or you need to. So what I like to say is, hey, how about we secure your financial future and your kids' financial future first, and then sure, if you want to ride that wave of whatever your concentrated positions, you go ahead and do it. But I don't think. But everyone's a little different. That's what I think.
I think those are some great tips. Any sort of closing? We've talked about, we know a lot of CPAs will list this. Any kind of closing thoughts that you want, or something you really want people taking away that may include, if you have this kind of a client, here's when they want to call in you and say, bring in this kind of expertise?
Yeah. So I would say that, and I think we were talking, I think it was before we started recording, that I think that if you're if you're a practitioner, a tax practitioner, I think that there is great opportunity to go upstream. And I think there is a dearth of people that have knowledge in that pre-IPO space, and people that have it realize how critical tax is. And so, if you're a CPA now, or if you're in the tax area now, I think if you honed your skills and you held yourself out as an expert, I think you could probably get clients that are bigger and are stickier because they'll appreciate what you do. So I'd say, my first piece of advice is to specialize a little bit, and then hold yourself out as such, and charge what you want. Your expertise is in high demand and short supply. I guess that would be the first thing. And then, if you can build in, that financial planning piece or wealth piece, and you're going to, it's a good opportunity if you're working with those kinds of clients to convert them over as well.
Yeah.
When to call us. And again, if you have a transaction that you haven't seen before, again, I think prepaid variable forward contracts in particular, go ahead, phone us up, we'll talk about, what your expectation is and how we can help. We're all over the place, so, our website's a great resource if you have, general questions, if you want like a good background on ISOs. We have 3 different articles on 83B elections. You're welcome to check all that. That's at wrpwealth.com, and hop on Facebook. We're on WRP Wealth on Facebook, and also WRP Wealth on Twitter. And then I just started TikToking like a month or two ago. But that's mainly geared. It's more B2C.
More dance moves.
Yeah. Dance. A lot of cats.
Yeah.
No, it's a lot of it is really boring videos about me speaking about tax issues. is really what it is.
You're not selling it very well. Cats, I think, was your better.
Right. Should have stuck with cats. Yeah. So that's we're IPOgraphs.com. I'm sorry, at IPOgraphs on TikTok.
Okay.
Yeah. Aaron, I think the points that you made there is something we always kind of come back to, the importance of having a niche. So the ability to really go a mile deep and only be an inch wide is really important. It does allow you to charge what you're worth, and you'll be worth a lot more. So I think point kind of noted there that this is a little bit of a mystical area. And for those that don't want to do it, there are resources out there, or if they find themselves in a bind with current clients that there's resources not only from an advisory standpoint on your side, but also from a financial perspective on the loan side, which was new to me, and definitely something I'll keep in mind whenever clients come to me and we have to give them the unfortunate news of how much money they owe because they didn't say anything to us until March.
Yeah,
right.
Exactly.
Well, I'll say also with the niche stuff, it's more fun. When I look back at like my practice before we really focused, I was uninspiring to me, and if that's the case, you're doing the wrong thing. And once we focused, I started working with. And I love all my clients, but I started talking with some of the smartest people in the world, and it's fun. It's really fun to hear what people are doing and like the problems they have. Like it's way more engaging. So again, I'm with you. Do the niche as soon as you can because you'll be more passionate when you talk to people, and you'll be way more engaged. So yeah. I'm full on board with that.
And on the pre-IPO, not that you have to tell them now, but I assume some of your clients have hit it big with they did go public and things went well, which I can only imagine how fun that is to have a client that you've advised and say, hey, maybe someday, and then you watch that come true. That has to be pretty fulfilling. For
sure. And our clients are great. They're philanthropic. So like we help them do their family foundations. We help them work on their charitable trusts and all that, and it's great. They're making impacts, and they're doing great, things. So
it has to be really fulfilling.
I love all my clients,
and they make great wealth management clients when they finally do.
Yes. That was good to put last. Well, Aaron, thank you very much. I know I've learned a ton today, and this is really helpful. I haven't thought about the sort of IPO and pre-IPO option game for a long time, so this is really helpful. Thanks for sharing that with us today.
We're here to be a resource in this ever-changing industry.